Hi, my name is Aubrey Hearn, and I want to give you an update on the CI US Equity Fund. U.S. equities, as represented by the S&P 500 index, were up slightly during Q3, up 0.6% or 2.9% in Canadian dollar terms. Strong earnings supported U.S. stocks higher in August. However, growth and inflation fears in September meant U.S. equities retraced some of its gains. The Federal Reserve projections now indicate a faster rate hiking schedule than they did in the summer, further adding to market volatility. At the sector level, financials and utilities outperformed, and industrials and materials lagged. The September sell-off hit almost all sectors except for energy, as rising supply constraints drove prices to new highs. During Q3, the CI US Equity Fund was up 1.7%, outperforming the category by 20 basis points. Year to date, the fund is up 15.3% versus 13.2% for the category, so we're quite pleased with the fund's performance this year. We continue to build on our track record, and since inception, the CI US Equity Fund is up 333%, outperforming the category by more than 70%. In terms of the portfolio update for Q3, during the quarter, the contributors included Alphabet, as well as Brookfield Asset Management. Brookfield Asset Management outperformed as a result of better than anticipated results in the quarter. It also benefited from raising a record amount of new capital for several flagship funds. We continue to like the company on a go-forward basis. One of the fund's detractors during the quarter is Cigna. Cigna's share price underperformed as a result of slow end market growth and concerns over rising customer medical claims. However, we are encouraged by the recent divestiture of the company's non-health unit, favorable population demographics, and an improving regulatory environment. We also added CSX to the portfolios this quarter, which is a US railway, which we bought at an attractive valuation. In terms of our outlook, we expect volatility to remain elevated as a result of the disruptive impact of the COVID-19 Delta variant on supply chains and production in foreign markets. Higher interest rates and a reduction in quantitative easing could have negative impact on asset prices. The impact of inflation should add to volatility because it remains unknown whether or not it will persist beyond this year. To mitigate this risk, we prefer businesses that have pricing power. We continue to place an emphasis on balance sheet resilience and liquidity, which are critical to allow businesses to survive in an uncertain macro environment. Thank you.